Good morning. A warm welcome to ILA session on the tax system in India. ILA is the largest organization of legal professionals in India. We are present in 75 plus chapters that undertake events and activities for betterment of the profession. We undertake workshops, trainings, networking, legal aid clinics, and certain initiatives for the students. Before we begin, let me briefly introduce our speakers for the day. We have Mr. VN Dubey, who is the founder and managing partner of JMVD Legal in Indore, and who is also the president of ILA chapter in Indore. Mr. Dubey is a corporate and tax attorney and is in the profession for more than 3 decades. He is a senior fellow company secretary and is registered as insolvency professional with Insolvency and Bankruptcy Board of India. He has been the senior standing counsel for the Income Tax Department at MP High Court from 2017 to 20 and currently serves as the central government senior standing counsel for GST and other indirect taxes at Indore, being appointed by the Honorable Prime Minister of the country. Welcome, sir. We have Mr. Ashish Sodhani, who leads the International Tax Advisory and Litigation at Nishit Desai Associates. Ashish focuses on cross-border tax and corporate structuring transactions, including tax litigation. He has been involved in issues relating to applicability of minimum ordinary tax on foreign investors before the High Court, indirect transfer tax issues before the tribunal, and has represented clients before various forums, including tribunals, various high courts, and the Supreme Court of India. Ashish, welcome. We have Mr. Sudarshan Rangan, Principal Advisor at J&M Legal. Sudarshan is a lawyer and a chartered accountant by qualification. He has a master's in international tax law from the Vienna University. At J&M, his major focus areas are in international economic laws. He has more than a decade of experience on advisory, litigation, and transactional practice for his clients, both domestic and international. Welcome, Mr. Sudarshan. We have Mr. Bandish Soparkar, Advocate, High Court of Gujarat. With education in law, accounts, commerce, and a passion for design, technology, and politics, Bandish studies democracy as a tool of social design and litigate cases that determine relationships between the state and people in the areas of private affairs, public life, and taxation. Welcome, Mr. Bandish. We have Mr. Rahul Agarwal, partner, TCF Consulting Services. He has completed his chartered accountancy from the ICAI India with over 14 years of experience in domestic and international tax laws and tax litigation. Rahul is experienced in tax structuring, global entity structuring from taxation perspective, mergers, acquisition, and effectively advising clients on varied direct and indirect tax matters. We welcome all our panelists today. The session will be moderated by Mr. Navneet Chugh, Managing Partner, Chugh LLP, and President of ILA. Sir, over to you.
Thank you, Madhura. Thank you for doing a great job with the Indian Lawyers Association. We have a big goal. We are in about 75 cities, and there's 400 cities in India with a population of over 1 lakh, and we want to be in all 400 cities. No matter how long it takes, we'll carry on. If there is a ILA in your city, then please become a member. Please join the board of the Indian Lawyers Association in your town. If there is not an ILA chapter in your city, then we would love to start one in your city. And if you don't object too much, we'd like to have you be on the board or leadership of the ILA chapter in your city. So thank you for joining us today. We're going to cover an interesting topic, taxes, that not many people want to talk about, but more than that, people don't like paying taxes. But every single person in the planet wants his or her neighbor to pay taxes, even if they are not. So that's something unique about tax. With taxes, we're able to build a government and build a society and create civilization. So it's a very important part of any economy, of any country. India is unique. On Wikipedia, for instance, you can, or you can Google search a very interesting concept known as tax as percentage of GDP. And in what country, what percentage of the amount of taxes they collect, what is that as a percentage of their GDP? So we all know that Northern European countries, Norway and Denmark and Finland and Sweden have the most amount of tax, and of course offer the most amount of facilities and benefits to their residents as well. Lots of pension benefits, lots of healthcare, child support. But the tax is in all the Northern European countries, the tax is high, about 50% of income. And if you look at this chart worldwide of what countries tax as a percentage of GDP, it actually tells a very beautiful story of what's happening in that country. In a way, how civilized the country is, in a way, how much people are honest and trust their government and feel that they're willing to share with a part of their income and give it to the government so that the government can create a better society. And of course, even if the people don't want to, the systems in the country are such that very little income escapes taxation. So when you look at 75 million people living in slums in India, and you go down, and the slums are only in the big cities of India. Um, and when you go down these cities and look at people living in slums, and then 1 minute later you see somebody living in $100 million house, and somebody driving a Rolls Royce, and somebody driving a Mercedes, and somebody buying a Birkin bag for 3 crore rupees. And then you wonder what's going on. Why is it that we have such massive inequality? Every country has inequality, no question about that. And some inequality is, I suppose, okay. So if Jeff Bezos is the world's richest person in the planet and worth a couple of $100 billion, he's also employing 1.2 million people in the country, in United States. And these are not minimum wage jobs. Okay, a quarter of the 1.2 million, the warehouse people are at minimum wage or at $15 an hour. But 50% of the jobs are amongst the highest paying workers in the country. So some inequality is fine. At the end of the day, what is he going to do with $200 billion? Not much. But if that's how society wants to reward him, then okay. But inequality where the government is unable to tax people properly and use that money to have a system in the country where there is nobody homeless, there's nobody living in the slums. And when you look at the statistics of what it costs to create a small house, it's very little to put somebody in a house. Um, IMF once did a study, and worldwide now there's only 750 million people left in absolute poverty. This is where people don't get 3 meals a day. And IMF did a study, and India has 173 million of this 750 million people in absolute poverty. A quarter of the world's 150 million people in absolute poverty are in India. And IMF did a study that all it takes is $50 or $3,500 a year to remove somebody from absolute poverty to poverty. So this is how important tax is. And I understand there's tax loopholes and aggressive tax planning and wonderful lawyers, including all the panelists and attendees. And nobody should have to pay more taxes than is they legally have to. But when you have a country where 40% of the income is in informal economy and lots of money abroad, and there's so many tax leakages, and that 96% of the country does not file a tax return, these are things we need to address. And we'd love to hear from all of you. First, let me pose some questions to our panelists in alphabetical order, and then I'll go over it quickly with them, and then we'll have all the time in the world for you guys. Let me start with Ashish. So Ashish, you work for Nishit Desai in Mumbai. Right now, you're in Pune visiting your family, and of course, there is not enough electricity or there's outage going on, and so you're not on your video. And not that I picked you to be the first person, but you're alphabetically the first panelist. And so I commented when you joined that if 96% of the country that doesn't pay any tax, if they would pay tax and the 40% of the cash economy would be converted into a formal economy and everybody would pay their fair share of taxes, maybe the city of Pune would have a better infrastructure and there wouldn't be an electricity outage. But I digress. So you do a lot of cross-border tax and M&A work. So when you're doing the cross-border tax work, what are the top three issues your clients face when it comes to taxes?
Sure. Thanks, Avneet. Hi, everyone. So, Avneet, I think from an Indian tax perspective, I think there are, to pinpoint, three broad things that I see, right? I'll first lay them out and then perhaps we can discuss them. First is complexity, the second is uncertainty, and the third is trust, right? Indian laws are complex, uh, less complex than, of course, the US IRS, but they are still very complex. And this results in everybody fearing to come down to India to start thinking about, what is going to be the taxes. Every year, there is a change in the Income Tax Act by virtue of the Finance Bill. This this mindset of the government, of all the governments, not just this government, is changing these laws on a year-on-year basis, thereby not bringing clarity to the non-resident investor and making things far more complex than what they should be. A very apt example, what I can think of right now, is of the Vodafone case, right? And we've seen whatever has happened with Vodafone, with Kane, all of this, and how it's become more of an embarrassment for India. But you brought about a complex law which you didn't think through because you wanted to tax only a set of people. And look what it all turned out to be. I think India will end up paying from its own pockets or assets being seized, whatever it is, right? I think complexity is the first thing to tackle with. We are a developing economy, right? We want to, go to a developed economy. We want to become a first world nation. We need to think that is being complex the only idea. Every time something happens in India, there is a change that is brought into the Income Tax Act and says, we're going to tax this. There is a judgment which is not in favor of the government. There is a tax that is imposed on that. The second aspect is certainty, right? Any non-resident not able to, or rather, a non-resident investor wanting to come to India would like certainty. He would like to come down to India and he would like to understand this is the amount of taxes I need to pay. This is how my business is going to grow, and this is what I need to do. But coming to India, there are so many vagaries in the law. You don't get answers. You are met with number of questions as to what is going to be the withholding tax rate, whether am I to withhold, whether am I not to withhold. This is now added with the lack of judicial members we have in our country, right? We have an authority for it. We had an advance ruling where these non-resident investors can come and get a ruling. The Tax Act says that you need only 6 months within which the advance ruling has to give its ruling. And here we have cases lined up for almost 4, 5, 8, 10 years with no ruling. What to do about that? Where is the certainty? I think certainty plays a very big role when the non-resident investor is coming and looking at India and choosing to do business in India. Third is trust. Without trust, I don't think we can reach anywhere. Uh, in our tax system, if we go to the assessing officer, we are going to get a negative order, followed by the CIT, who's actually called the Commissioner of Income Tax, but I'd call him the confirming income tax officer. He confirms
Yeah. Thank you, Ashish. I'll
so
come
there
back to
is
you. So, Ashish, we're having trouble
literally of
hearing you.
mind. There is no thought process to what is happening because the system is based on how
Okay. Ashish, we are having trouble hearing you. Let me come back to you. So, Bandish, over to you. What is the reason? What would you say are the top reasons why the government of India is unable to collect its fair share of tax? And why is there so much tax leakage?
Okay, let me continue from what Ashish was saying, and I also think that the first reason is of a culture. I think there is a mutual mistrust between the state and the citizens, where the assumption on the side of the state is that every earning citizen wants to evade taxes, and the assumption on the side of the citizens is that the state wants to make the wrong and largest assessment possible. And this culture is helping no one. uh, what we need to have is that state needs to become a partner in the commercial success of the citizen. If you only have income, then you will have taxes. Therefore, the focus of the state should be on the generation of the income on the part of the citizens. If the citizens are able to generate income, then the state will be able to generate taxes. And that will only happen if there's a mutual trust and understanding between the two players. That I think is currently lacking. And that is, I think, the major reason why the state is not able to collect taxes. Second reason I think is not so much to do about collecting taxes, but retaining taxes. If you look at the budget, you will see that the amount of interest paid on the borrowing of the state is almost 50% of the tax collected. So if we, as a state, we are able to reduce our liabilities, then even at the existing collection of taxes, we are able to retain a large chunk of the taxes collected. Our defense budget itself is 8% of the total budget. So I think we need to rationalize our balance sheet, our focus on the expenses. Then even at the existing level of taxes, we will be able to retain a larger share. One is of course expanding our collection, and second is the retaining our collection. So this was on the retention part. The third issue is regarding the federal structure. As you rightly said, in the high income countries, you have a larger tax to GDP ratio. But also, if you look at uh, in the higher income nations, a large part of the taxes is also levied by the local governments. In India, of course, we have the local, state, and the central government. But large part of the taxes is collected by the central government and retained by the central government. This also needs to be rationalized. If a correct rationalization is taken place, I think the local governments will be able to collect. And what happens over there is that the citizens are also able to see the impact of their taxes being utilized in the infrastructure, which they themselves enjoy. So that rationalization can also happen. We have seen that the agriculture as a field has has changed its color over time, and because it falls under the state list, the union is not able to monetize taxation out of it. But so this rationalization has to take place. The fourth reason, I think, which is a very important reason, is that of the basis of taxation. The basis of taxation in the current law is based upon the economic models of 19th century, where land, labor, and capital was seen as the ingredients of any economic activity. I think in the 21st century, these assumptions have undergone a paradigm shift. Look at Tesla, Flipkart, until recent Amazon, even Zomato for the recent example, the valuations are skyrocketing. But if you look at the balance sheets, they're into the reds for years and in crores. So there's a complete mismatch between the commercial valuation and the traditional profit and loss. And governments are not able to identify the taxable income in traditional sense, and therefore we need to change the recognition of income uh, that is suitable to the 21st century businesses, and understand as to how do we economically identify the scope of taxing the 21st century businesses. uh, and that also, then the fifth reason is similar to that of the benefits given, the benefits that were given in the 19th century to the political parties or religious institutions. I think that have also gone a paradigm shift. Today, political parties have incomes running into thousands of crores, and I see no reason why they should not be taxed. So I think we need some rationalization of the economic understanding of income and taxation in the 21st century. And if that happens, I think the collection of taxes can also decrease.
Okay. So with the startup world, like Flipkarts of the world that have a lot of revenue but are losing a lot of money every month, and if you're not going to tax them on net income, what are you going to tax them on?
Yeah, I mean, they're having huge receipts. I mean, one one can also look at is that the equity that they're getting is a quasi profits as well, because the equity, you can either have profit to be used as expenses, or you could also use the equity to be used as expenses. Today what they are getting is that the huge equity is adding into their cash flow, and months after month, which each round of funding, they are replenishing their cash resources. But that cash resource is not coming out of traditional profits, it's coming out of the equity, which is in a way quasi profit way as well. So one has to innovate into various methodologies of how to uh, tax this, if there is a way of taxing this. I mean, we of course have to be conscious of the basic principle of taxation, that it has to be economically neutral, where both the parties in the transactions are at a flexible point, where the government come in the middle and say that, okay, if I tax this, the seller is not going to be worse off for not selling, and the buyer is going to be worse off not buying. So the sweet spot has to be identified in the current scenarios, which I think is possible to identify.
Right. And at least a good thing with these big public companies is that 100% of the GST is at least collected and remitted to the government properly, which I don't know how much of that you can say for the 50 million private businesses in the country, which brings us to GST. And Rahul, you're a GST expert. So tell us, what do you think, what grade would you give to the implementation of GST the last few years? And if you were made the GST cabinet minister for a week, what would you do to make it better?
Yeah, hi, Naveen. So we'll go to the history a bit. So GST was implemented in India in 2017, and it has been uh, the the implementation happened after several years of deliberations. And before GST, every state had its own state laws, VAT laws, the value-added taxes which they charge on uh, the indirect taxes which are charged on goods. The central government had the service tax, they had central excise on manufacturing, custom duty, and plus there were local taxes like entertainment tax, luxury taxes, which were charged by the different states depending upon what different states had their own set of charges uh, depending upon the kind of economy they are having. So the idea of GST was to subsume all the taxes into one tax, one nation, one tax, wherein it's a model code is created which is implemented in each and every state. Because of the federal structure, there are certain things on which states have right to taxes in India. And also, the simplification of taxes was a major objective of GST. Over and above that, there were tax on taxes. There were double taxation which were happening. The central excise was charged, which was added to the cost. When from central excise after manufacturing, when it was the goods moved to the states for actual sales, there was VAT. VAT was charged on the central excise component also. So there was tax on taxes which were there. Plus, all these agencies were independent, separate agencies. The level of coordination between these agencies was also very, very minimal. So there was very high level of tax evasion, wherein fake bills, unreconciled transactions, excise. The declaration with the excise department was something else. With the VAT department was something else. With the income tax department was something else. So what the GST has been able to achieve is that now there is a single law for all the states in India. all the small taxes have been subsumed into GST. It's well integrated. So with PAN based integration of all the dealers have happened, wherein the government can keep a centralized track on what level the excise duty at excise duty level, what taxes are being paid, at the VAT level, what duties are being paid. All have been subsumed into GST, and now it is clearly visible. However, what is still lacking is the simplicity which should come. So cascading effect of tax on tax has been reduced to a large extent. Still, there is some tax on tax happening because certain items have been kept out of GST. Petroleum products are still out of GST. Electricity is out of GST. Alcohol for home consumption is out of GST. So still on these items, there are tax on taxes. Still, to a large extent, cascading effect has been removed. However, what has happened is that the complications of all the laws, they all have been named GST, but the complication still remains there. So the exemptions which were there in the central excise, in the GST also we have IGST, CGST, SGST, the input tax credit allowability from CGST to IGST is complicated. There are different exemptions available on different kind of services, on different kind of products which are available. So like initially we were talking about direct taxes, international taxes, even we were talking about things getting complicated. So even in the GST, the level of complication is so high that when the implementation stage came, there was so much hue and cry. There were software issues. There were the small businesses. They faced a lot of trouble, and even large businesses they faced trouble in migrating into GST and doing the compliances properly. Now, because of these hue and cry, now we are in the 4th year of GST implementation. Still, government is required to bring in 1 or 2 exemptions, or they are giving relaxations in the various provisions, which is leading to creating a hole in the whole idea with which the GST was implemented. So the relaxations which are being given now, that is defeating the purpose with which GST was being implemented, and things are becoming more and more complicated. So GST now has been able to subsume things into one place, into one name, but bringing down the number of slab rates, like right now we have zero rated sales GST, we have 5%, we have 12%, 18%, 28%, then there are cess on luxury items and sin items. So reducing the number of slabs which are available, reducing the number of exemptions and conditions, terms and conditions which are put in. So these are something very important steps which the government will have to take so that the simplification comes into place, and that will increase the base of the taxation, and compliances will also increase to a large extent. Because of the complications and issues like this, the actual compliance on the ground has been reduced, and of late we have heard a lot about these fake bills cases, fake input tax credit cases, wherein to a large extent these scams are going on. So the initial GST had wanted to charge GST at each and every level of the supply chain. So if that was there, and online reconciliation of each and at each and every level was to be done, if that would have been implemented properly as it was planned, the whole issue of this fake bill and tax evasion could have been avoided. But because of complications, relaxations were given, and that enlarged the gaps in the laws, which is giving opportunity to people to again go to the old ways of creating fake bills and claiming fake exemptions and input tax credits.
Thank you, Rahul. Thank you so much. Uh, maybe one day we'll have a GST where there's no tax on almost anything except for stuff that rich people buy. That's it. So Sudarshan, Thank you for joining us. And Ashish earlier talked about M&A transactions cross-border. What I wanted to ask you is that uh, there is some chatter that there's a lot of M&A happening where India is one of the parties, where one of the uh, company buying or selling is based in India. But there's a lot of chatter in the M&A professionals worldwide that when you deal with India, you're able to cheat India easily. And when the price allocation needs to happen between India and US, India always gets the bad deal. As a result, other countries' governments and finance ministers and treasury ends up picking most of the tax, and India gets cheated out. And at times it's 95% to 5% ratio, meaning 95% of the tax emanating out of the transaction ends up in some other country's pockets and not India's. Is that true?
Well, thank you, Navneet. Thank you to the ILA for having me here. A very interesting and tricky question to begin with. I was expecting a full toss, but nevertheless, I'll try to navigate this. I say very interesting, tricky for the fact that I cannot give a binary answer to it, yes or no, for two possible reasons. Reason one, your question was, whether India gets less than their fair share of tax collection. See, the term fair is inexorably subjective. It's like morality, I will put it this way, and lies in the eyes of the beholders. And being a fluid concept, it depends on many other factors, such as non-tax factors, such as culture, political influence, importance of redistribution, etc. Now, my second reason would be, lack of empirical data to prove that the tax collection is inadequate. I believe in the famous quote by Peter Drucker, the management guru, be it any administration, government, non-government, what gets measured gets managed. India till date does not measure tax gap. A tax gap in layman terms is very simply defined as difference between tax collected and that which should be collected. In fact, for the first time recently, early this year, the 15th Finance Commission estimated a shortfall in tax collections of over 5% of the GDP. This is the first tax gap assessment done in India, which you see quite very common in all the developed economies because that acts as an indicator in terms of what are we collecting. Now, surprisingly, if you look, India has a good multilateral agreement for exchange of information, which we've been using for the last decade or so. But having agreements are only battle half won because if we get information, we sit with plenty of data, but we don't have the money. It's largely because many of the treaties which India have, almost 50% don't have proper clauses for tax collection and recovery. So therefore, with this, it is very difficult to judge as to whether are we getting lesser number of shares. But nevertheless, since you posed me this question, it's imperative I give you a binary answer. As to whether India gets less fair share in the cross-border deals, my view would be yes, India is getting lesser share. Now, how? My assessment towards this is based on data points from two sources. If you look, number one would be, there was a recent study done by an NGO, the Tax Justice Network, based out of UK, which released a report titled The State of Tax Justice 2020. Which incidentally is the first of its type report on assessing what is the annual economic and social cost of international tax abuse. Now, this report states that the world is losing around almost $430 billion, out of which $250 billion is attributable to multinationals shifting profits, and the balance is attributable to individuals hiding undeclared assets and income in offshore tax locations. Now, incidentally, the study estimates that India suffers a $10 billion tax loss, which roughly translates to 70,000 crores, and a major chunk of it is corporate tax evasion, and around $200 million can be attributable to offshore private tax evasion. So these numbers are significant. In fact, the study also says the tax loss that India loses is almost 45% as a percent of public health expenditure, which in this current pandemic time, you translate in a literal way, India could have employed almost 4 lakh nurses and a lakh odd doctors, which would have helped, whatever worse second wave which we encountered. So this is indeed very, very significant. But one can always question these numbers, data, methodology, saying it's exaggerated, NGOs. don't have valid methodology, but I think that's a debate left for econometricians to rebut. Now, on the second source as to why I say that yes, India is not getting its fair share, India introduced a unilaterally digital tax called the equalization levy, basically which Bandesh had when we know how to tax the new age fourth industrial revolution companies or the tech entities. And now, if you look, the equalization levy was targeting non-resident digital service providers. When this was introduced, obviously, this was unilateral, so it violated international principles, got a lot of backlash, noise, hue and cry for violating it. But despite its criticism, what is surprising to note this was introduced in 2016. You look at the 5-year data pattern, from where it started, today it has collected 1,500 crores from 300, and year on year it seems to be increasing. This is for non-residents, the new age businesses, the 21st century businesses. So the 1,500 crores may be a very small pie in the overall tax cake, but what it shows, the pattern shows is the revenue trend has been increasing steadily year on year, which actually justifies to a certain extent the fact that these introduction of unilateral taxes has some merit. Now, interestingly, other countries also emulated India in this regard. Now, just to sum it up, be it redistribution or allocation of taxing rights, when there are two countries involved, when tax being a sovereign matter, there'll always be a subject matter of contention. But having said that, in an optimistic note with which I'll end is, India has been doing some phenomenal work in the recent past in playing a significant role to ensure that whether we are developing or whatever it is, on behalf of other developing economies as well, is giving voice to ensure that they get their fair share of tax revenue. Thank you.
What do you think is the tax gap? The study said 5% of GDP. What do you think it is?
No, see, that's a different point here. Now, personally speaking, you also started off, Navneet, that the tax GDP ratio. I would personally give a different look at it because, see, India's tax to GDP ratio is 16%. The tax gap says 5% of GDP is the amount. But coming to your specific question on tax to GDP, which you also mentioned in the beginning, I would look at it slightly differently. What India should do is, what today India says is rupees 20 of tax revenue on 150 GDP is any day better than 20 of tax revenue on 100. So the focus should be increase on GDP. Unfortunately, the GDP tax where many economists have been focusing, I would look at it slightly differently, which some of the economists also look at it, is try to increase your GDP, try to have the tax revenue stagnant. That shows that the tax policy is friendlier to whatever issues which Bandesh Ashish raised previously. So this is how I would look at as a tax reform should actually foster GDP growth. And this may not be a right indicator.
Right. Okay. We've been on the economy and the government and infrastructure, and the government needs money, and household and the finance minister's side so far. Let's jump over to the taxpayer side for a change. So Mr. Dubey, you were a tax and insolvency expert, and if I for whatever reasons I do XYZ in India, and then I have a lot of taxes due and I don't have any money left, can I file a bankruptcy and not have to pay taxes? What's the interplay of the new bankruptcy code with tax?
Thanks, Mr. Navneet. And first, I would like to congratulate ILA for selecting this nice interaction topic. Basically, this in Insolvency and Bankruptcy Code 2016, given in a very landmark law and changing the entire distressed assets law in the country. And actually, what we have tried from 1985 to BIFR to then we tried the stresses through the separate courts of DRT. Then we have got given the right for enforcement of security interest to the bankers, followed by, in spite of all these changes, we were not able to have any success, and the NPA started mounting and all these. It is not the interest of the bank. In fact, it was a matter of the entire economy. And for any economy, ease of doing is very good, excellent, required. And for ease of doing, ease of entry and ease of exit is also equally important. If somebody is entering into business, taking entrepreneur step, the ease of exit is also equally important. That's why this IBC law came into the force. And this is the basically law is got the basically amendment with the along with other various laws. And this is the unique law is created. And instantly in the last 3-4 years, hardly we have got 2016, we are hardly in 2021 today, starting in the 1.5 years with the COVID, we are struggling. But the law we have recognized, they have done the tremendous benefit. I would be coming to your tax related question, but first let me deal 2-3 minutes to IBC. So basically, this in the last 3-4 years, they have able to do excellent. Even the forum which is created with the limited benches and limited manpower able to do. Even the professionals like advocates and counsels were limited with the knowledge of this bankruptcy, but were able to, I think, able to contribute to a large extent. Even the judiciary, I have to admit, in our Honorable Supreme Court has given a very landmark and quick judgments, and none of the judiciary not put on hold. Basically, why we have writ remedies and special powers with the constitutional powers, we try to block so many things, but incidentally the judiciary played a very positive role. And then we have got all the law, even the government and executives, IBBI and government have got the law very dynamic. We have got the frequent changes. Frequent changes means they are going to accept the immediate changing, such as suppose the introduction of 29A, introduction of law of limitation, while we will be talking about the overriding provisions of the act, and then we try to presume everything can be overridden, even the debt which is the time barred can be utilized and enforced. And all these laws, we have got the first Supreme Court clarified, then we got amendment. Again, the 29A, basically the promoters backdoor entry. Then immediately they have realized it is for MSMEs, they should be relaxed. They have given we have got a very dynamic set, and it is getting amended and implemented. And coming to the just highlights, basically before touching to your tax questions, basically tax laws as far the IBC is concerned. IBC, we are having the provision of the moratorium. The moment CIRP initiated, no suit and proceedings can be initiated. So everything put on hold. So that is the law is given. Since in that situation, we cannot disturb the organization. What is the situation? RP is going to take over the position. It has to be handed over to the appropriate resolution applicant. That's why in between proceedings are stopped in the interest of the entity itself, not the interest of anybody. So this is the one very good provision of section 14 is the moratorium provision which we talk. But again, when we are coming to the tax issues, so whether the assessment proceedings cannot be continued, whether the TPO cannot initiate the proceeding, whether DRP cannot, whether what can we do, we appeal it. I think we are having as per the jurisprudence and our administrative understanding, the proceedings, this sort of routine executive proceeding, they can do the assessment, but they cannot enforce the recovery. Since if something is going on. So this is as far as the section 14 is concerned. Another is very important section is section 31, which puts the finality. Somebody has taken over submitted the resolution plan and got it approved. Company altogether comes into the new avatar under IBC. If I am acquired, I have given 100 crore for acquisition. I have given a modus operandi. I have given some terms condition. It is approved by the GOC and finally got the endorsed by the NCLT. Then tomorrow income tax department or any tax authority should not come. I am having the separate dues. So as far as tax dues is concerned, there is two, whether the pre-CIRP and post-CIRP. As far as pre-CIRP period is concerned, whether it is the crystallized date, whether not crystallized date, they are falling under the waterfall mechanism. Again, there is very beautifully, first time government over the years has considered its position in the interest of the industry and entrepreneur. They are below, they have its position from, we were already happy with the crown debt concept. I was practicing as a tax lawyer. The crown debt concept in India, unwritten law. So anything can be done from the British period, what we are using. But incidentally, the government has in the law specifically considered their position. They are below than the secured creditor, below than the work mandates, even below than the unsecured financial creditor. They have taken their position at the fourth level in a CIRP situation. So as far the pre-dates are concerned, basically they are supposed to file their claim with the RP, and whatever the waterfall mechanism and whatever the resolution plan is approved, they have to get it. They cannot, and the moment resolution plan approved, it reaches the finality in pursuance to the provisions of section 31. read with 238 of IBC, nobody can touch upon. This is the beautifully, and even the recently we are already, even the Rajasthan High Court and has confirmed that view. But I think law is quite clear. We are not going to be the judicial view. Law is quite clear. We are getting the finality of the moment somebody is bidding the company with the X amount, with the X terms and conditions, he is going to have the past. Certainly now since this provision is slightly left for the MSMEs, even the promoters can acquire, make the resolution plan. The issue is now the burning, whether those, even the guarantors who are the resolution applicant. There are two situations. In case of large scale, if whether guarantors are also excluded from their personal liability as far the bankers and institutions are concerned. And similarly, in MSME, if I'm the resolution applicant, what can be the situation? All these issues are now being very threshold being dealt. So incidentally, as far as taxes is concerned, coming to the tax point, the past dues are finally getting crystallized. The companies are together in new avatar. Nobody can talk. Whether the appellate, if appeal is filed by the department, they have to withdraw. And if anything, proceedings are in the interest of the company, and if it is the part and package of resolution plan, that can be certainly enforced. There is no bar on the company to enforce its own assets. That is the one part. And as far liabilities are concerned, companies are together in new avatar and can do that. And as far the post dues is concerned, certainly they are going to have the new compliances. Again, the very interesting era in the GST is also, I think, my with me the leading GST, and then we are going to have the how the credits will be flow, what can be the past, what can be done, whether compliances of RP, how it is all the laws. I think the government is very proactively handled with the tax paradigm with vis-a-vis interplay with the GST. It is nicely being handled with the everybody, and we hope that this law is one thing that made very serious change. Very responsible borrowing is going to take place, and responsible working is going to take place. If I am not performing, I have to leave the say. I may be the owner of particular company, but it is the company is the national asset. I put my company into the diaper for 15 years, even the assets are already, even the jobs are lost, but still I am continuing as owner. It was the more of the national loss. I think in this era is going to make the dynamic change in the coming years. The new avatar of going to come, either you have to run, I have to leave the chair, and somebody will take over. And then somebody will, it is going to be the employment creation, employment generation. We are having very fantastic example of the large scale, whether it is Ultratech Cement, whether it is Bhushan Steel by Tata's, whether by steel unit, one of the largest steel units is struggling from last over a decade. It is acquired by ArcelorMittal in the country. It is basically very beautifully from mid-size to large size. We are having a very good experience. Certainly, the tax department going to have this. Have to going to write up so many things as far as the past dues are concerned. Certainly, their waterfall is too low. Again, lot of litigations, and the councils like us may be losing in the lot of opportunity, since everything is going to be crashed and zeroed as far the coming period is concerned. So this is the basically the beautifully what I try to say as far the tax laws, and there are certain lot of things are still left, like what would be implication of the capital gain, fair market value of acquisitions under 50C or slum sale. Lot of things are still get very forward of losses under section 79 of income tax. As a taxman, we are still having the lot of, we are feeling government is not able to address. So if the government is not able to address, in spite of section 31 of IBC, in spite of overriding effects, that is matters may be reaching to the court, and we have to put our strength to get it solved. Basically, there are a lot of challenges, but overall, we are very happy with this development, and we speak. I think this is given the rating, improve the rating of the country also with the pro IBC, and even we admire the efforts of all stakeholders in that. Thank
Wonderful.
you.
Thank you so much. So Ashish, 96% of India doesn't file a tax return, only 4% file, and out of the 4% that file, 1% doesn't pay tax. There are 400 million workers in India, 200 million are in agriculture. And I guess in the 60s, India had a massive food shortage, And all along for 70 years, agriculture income has been exempt from tax. 200 million people in agriculture, they're exempt from filing tax returns and paying taxes. Do you think 70 some years, 4 years later, the rich farmers over a certain threshold amount should file returns and pay taxes?
Sure, Abhi. I hope I'm audible this time.
Yeah.
So yeah, all right, thanks. So I think this is a mindset issue, right? Uh, 70 years ago, we considered ourselves to be an agrarian economy, and therefore we thought, these people are the food bearers. We need to give them the incentives, and therefore let them not pay tax. But today, I think the question that needs to be asked is, are we that economy, or have we moved on from being more than just an agrarian economy? So the way I see it is that I think, of course, agriculture is a big part. There's no doubt about it. But I think from a service industry perspective and from an entrepreneur, very, very big in our country, and we still in that mindset which is bringing us sectors which need to be which we need to put on the higher pedestal than perhaps agriculture. So therefore, to that extent, if there's a rich farmer, I do believe that he should be filing tax returns. He should be paying taxes, simply because the exemption that is available to him should not be such that he is exploiting it. The other way to look at it, this perhaps would be that we need to continue to give the agriculture farmers the same exemptions, and we also give all the other sectors who are booming in this country the same advantages. But then I think that plays slightly incorrectly from a growth perspective, right? Because you are suddenly giving exemptions to everybody and not earning anything for the development of the country. So I'll keep this one short, and I do believe that rich farmers should be made to pay taxes. Of course, you could give them some exemptions, some breaks, but that doesn't mean that they go completely out of not paying taxes.
Right. Good. People that build homes, people that work for the fire and police and save lives, and ambulance people and doctors that cure people, I guess they should get a benefit. Every mother that takes care of a child should be given a benefit. Every father that's sick but goes to work and earns a livelihood for his kids. The list is endless. You can argue that every single person in the entire country is doing something good and valuable. Can you imagine the person that lets a train go by and says there's no train up ahead, the signal is clear? Is that person's job not important? Farmer's job is more important. So I think, the Constitution, line one is all human beings are equal, and then the government of India starts this drama of this person is preferred and this person is different caste. And second line onward, the government itself starts violating the constitution and starts creating inequalities. And there's black money being uh, sheltered through agriculture income. There's rich politicians that have agriculture income and not paying tax. Income is income, whether it's from agriculture income or pulling a burning person from a house. And over a certain amount, everybody should pay taxes. Speaking of which, Bandesh, if you look at the other 192 countries in the planet outside of India, some 13 don't have a tax because they have a lot of oil. But in most of the other countries in the planet, especially the developing ones and the developed ones, there is generally an 80-20 rule, that 80% of the tax is paid by 20% of the richest people in the country, which seems fair. And in a lot of countries, the bottom half doesn't pay any tax. In some countries, the very poor, when they file a tax, the bottom 10%, the bottom 20, the bottom 30, when they file a tax return, the government sends them a money. a check saying, hey, we just saw that you didn't make enough money, and we know that's not enough for you to live on. So please, thank you for not standing outside on the street and begging. Thank you for not stealing. Thank you for not filing unemployment claims. Thank you for getting up in the morning and taking your kids to school and getting ready and going to work. Here's some extra money. And one of the logics of having these 50%, bottom 50% of a country file a tax return, even though they pay no tax, is because then they participate in the country's tax system and they participate in the household of the country, and everybody feels they're pitching in. So uh, in India, we have 400 million workers and only 16 million file a tax return and 12 million pay tax. And so 96% of the country is not contributing in any way. What do we have to do to have all 400 million workers in India file a tax return?
Okay, so I have a slightly different take on this. Adding to what Sudarshan said, I think the focus should be on improving the GDP to begin with, uh, and improving the tax to GDP ratio. Uh, Having everyone to file the return of income, to my mind, should not be the focus to begin with, because I tell you what, even at the existing 4% or 6% people filing the returns and 4% paying taxes, frequently we see, as the date of filing the return comes closer, the website crashes, even with the 6%. So imagine if there are 96% people more are adding into the list of filing the returns, what kind of infrastructure we will need. And even, I mean, as you rightly said, we have a huge income disparity, of rich being super rich and poor being super poor. Having those people file a return is only going to add into the regulatory cost for them, while we will not have the enough income coming in from them. What is of course crucial, what you say, that what is of course crucial is to have a network of information, the accurate information on the people, to understand what is their economic levels. Do they need support from the government, or are they supposed to support the government? And therefore I think this government in the recent times have generated or created that infrastructure which correlates the data point among different government agencies, such as the banks, ROC, SEBI, RBI, GST, income tax. Today all the data is digitized and these agencies are sharing information with each other. A decade ago used to be very popular that the businessmen, for getting a loan from the bank, would show the income or the stock valuations at the higher side, and it would show the different figures to the income tax department. But today it is not going to be possible, because the data that he has shared with the bank to get higher loans is going to be available with the department, where he cannot go back and say that, oh wait, my actual stock is this much. The reconciliation is going to be automatic, computerized at the back end. The Aadhaar and other distribution systems have digitized to make sure that the poor and the needy will get the support that it needs. So I think the digital infrastructure is at place. I don't think that filing the return per se is a way to address the digital gap. I think we already have that. Uh, so I think we need to focus on increasing GDP, patching the loopholes of the digital infrastructure that what we have. And once we have that, I think then we will be at a better position to look at the present situation.
Right. So, Bandish, what do you say to people that say that the only way, the fastest way to create a GDP increase of India is if everybody pays their fair share of taxes? Because then the government can use that tax money to create this massive infrastructure of bridges and railroads and airports and millions of houses. The minute you see somebody on the streets living in a slum, that that country does not have a good tax effective collection system, Because if the government had money, it doesn't take a whole bunch to create small houses. Every country's done that for the poor. As a matter of fact, if you look at China, they knew that they were going to create industries in cities. They knew they wanted to create 20 cities in China that have a population of over 10 million. When they started, the population was 1 million. They knew 9 million more people were going to come in. So they built these houses. They moved people from villages by the truckload and put them into newly built houses. As a matter of fact, they built so many houses that some of these houses are staying empty now, right? So you can't create a effective GDP growth if there is no infrastructure. If everything is delayed and there's traffics, like if you look at the petrol consumption of India, what would you say? 50% of it is wasted because the cars are just sitting on the road and not moving? I've sat in Noida on one day and I didn't move 1 foot for 30 minutes, right? The car was running, the AC was running. What is the loss to the GDP of people sitting on the roads? Bangalore used to be one of my favorite cities in the planet. Now I don't like going there because of the traffic. Now I make appointments on one side of the city one day and spend a night at a hotel on that corner of Bangalore. Next day, I move to another corner of Bangalore because my appointment next day are in that part of the town. What is the loss, right? And you said we don't have an infrastructure to have 200 million people file a tax return. To me, that's creating 1 million jobs to collect these tax return data and understand what's happening in the country. So there's a wonderful article somewhere on internet, if you ever find it. It says that the developed nations, there's a silent asset at work. The developed nations, and this is not on any country's balance sheet, since all of you are good with accounting and taxes, you understand. So there's hundreds of trillions of dollars of infrastructure that the developed nations have created, which helps create new businesses faster, and there's less red tape, there's less wastage of time. And this trillions of dollars of infrastructure starting from 1850 is sitting on these countries' balance sheet. And people wonder, why are these countries so successful? It's because of this hidden infrastructure created with tax money.
No, I completely agree. I mean, therefore, we are in a kind of a vicious circle where because we don't have money, we are not able to create infrastructure. Because we are not in infrastructure, we are not able to get money. So we need to break out of that vicious circle. And I completely agree that at some point in future, we need to rope in everyone into the tax net, whether they are paying taxes or not. But the information regarding the return must be available. But to my mind, that probably is a 20-year a goal. In a 5-year goal, probably our focus should be to have a correct mindset of environment to increase the income, because theoretically also the tax.
Right. So it's okay, Bandesh will wait 20 years. Human beings first walked into India 75,000 years ago. We'll wait for another 20, no problem. As long as there is light at the end of the tunnel, no issues. So Rahul, this GST business, so speaking of GDP and increasing GDP like Bandesh and Sudarshan want, one of the ways to increase GDP is to create an increased consumption, right? Um, Somebody once told me one sentence 25 years ago, and it changed my life. And the sentence was, Navneet, don't mind spending money, because when you spend money, it's somebody else's income. And so if you look at, since after listening to that guy tell me this, I've increased the amount of tips I leave at a restaurant. There is one of the founders of Facebook, Chamath, he's a Sri Lankan. He says, I have a simple rule in life. I look at the bill, and if the bill is 500 rupees, I tip 500 rupees. It's very simple. I don't do this 10%, 15, 20, 100%. It's easy to calculate. Whatever the bill is, leave that as a tip. And the important thing of a tip is if everybody leaves 5, 10, 15 rupees tip, it's nothing to you. But for the waiter at the end of the day, he or she's made 500 rupees, which doubles up their income, right? So if you look at all of the economies of the world, most of them went from agriculture. In 1800, the per capita income of the entire 500 million people in the world was the same. Nobody was rich, nobody was poor, everybody was in agriculture. But if you look at how the countries have progressed from agriculture to industrialization to consumption and service, India is a unique model. We're going from agriculture direct to consumption and service and forgetting about industrialization. Okay, fine. But if we want, and look at United States, for instance, uh, 60% of the GDP of United States in 1950 was industrial output, and now it's down to 10%. 70% of the US economy is consumption, buying and selling stuff. So in 2008, when there was a recession going on, somebody got on CNN, some economist, and somebody asked the economist, so, hey, what's the cure for the recession in US? How will we get out of recession? So he said, when people start going to the malls and buying stuff they don't need, we will come out of a recession. So when we want to encourage consumption, right? And so why have GST? We should be cognizant, right? Don't you think India should be cognizant of the fact that if we reduce the taxes on necessities and comforts, it'll increase the consumption and will increase jobs. Furthermore, sales tax, GST, is a very regressive tax. The poor people or the lower middle class pay a way higher share of their income in sales tax than the rich do, because the necessities everybody needs, whereas the comforts and luxuries the rich buy, they don't they don't need to spend that money. So the tax, when you tax sales consumption, the poor people end up paying more of their salary share than the rich. So to tax the rich, we should be focusing on income tax and not on GST. What's your thought?
Yeah, agree completely, Navneet, on this. But last time also I went into the history. I would like to go there once again. So when we had different taxes, central excise, customs, VATs, state taxes, there were lot of items where the effective tax rate with tax on tax was 30%, 35%, 40%, till the 42% taxes were also there. So with GST coming in, till a large extent, tax on tax has been reduced. The highest tax rate is 28% under GST, with some cess on sin items, wherein additional cess on cigarettes, tobaccos, alcohols, not alcohol for human consumption, but yeah, on aircraft they have additional cess, which is there in place. But the effective tax rate in last several years have come down till a certain extent, to a large extent, I would say. Even after GST implementation in 2017, when GST was implemented, there were around 191 odd items which had 28% GST tax rate. After 2018, those that list has been reduced to 38 items. So to a large extent, the items which attracted 28% GST has been reduced. But still, we have a few items in 20 motor vehicles, for example, even second-hand motor vehicles, they attract 28% tax. We have a lot of people who complain about it. Then we have services under 18% slab. We have a lot of goods, even essentials under 18% and 12% slab rate. So cannot agree more. For the essentials, we have food items which are exempted, but still there are a lot of essentials which are taxed at higher rate. Like ventilator earlier was taxed at say 12%, which has been reduced to 5% during the pandemic times. So there are a lot of life-saving items. There are essentials which should be brought under lower tax rates, and the overall slab rate should also come down. That will increase the tax base. That will increase the penetration of GST into the markets, but the overall slab rates should come down, and even the number of rates should be reduced, is what I very strongly believe, and would want that to happen.
Okay, good. Write a letter to the finance minister once a week. The same letter, keep photocopying it and keep mailing it. They need to hear from us. Sudarshan, so 40% of the country's economy is in black. How do we capture it? How do we tax it? I'm told a majority of this unaccounted income is lying in political parties and religious institutions. Do you think India should look into taxing the political parties and religious institutions, and how would that work?
Right. In fact, I think Bandish touched upon this in his first question in terms of how do we need to get out of the archaic 19th century mindset and look at taxing political parties and religious institutions, which I totally subscribe. I would rather go for this than agriculture, considering the fact that we still haven't figured out cooperative federalism in the right manner. But having said that, since you mentioned it's in black, now see, I'll take a step back and look at it in a fundamental basis. How do you define a black money? That itself is a subject matter because one school of thought says it's illegal income. But you look from a tax standpoint, even illegal incomes are subject to tax. Tax doesn't matter whether it's illegal or legal. At the end of the day, whether it's illegal or legal, as long as it evades tax, then it becomes a black money. For example, a trader markets a black, has a black market profits. It's always taxable as business income. Now, why is he doing that? He's doing not necessarily to avoid income taxes, but there are other factors for evading maybe indirect taxes, custom duties, flout economic controls, and more importantly, this is where I'm going to segue into, is to meet certain costs, which cannot be shown in the book, such as bribes, political contributions, etc. So now, therefore, these illegal incomes for political contributions or bribes or kickbacks, why are they doing it? They need to do it so that as in return, quid pro quo, I get licenses and permits, fund for their elections, etc. Now, interestingly, as you rightly mentioned, they're exempted from income tax under section 13A and 13B. The number 13 is, I know it's very superstitiously not lucky. We see flights don't have seat number 13. Bombay Stock Exchange does not have a 13th floor. And you don't have, see, 13 even in real estate buildings. It's so ironic that we're talking about 13 here as well for religious institutions or political parties. Now, the point is, yes, I think they need to be taxed. And this is surprising to see all the political parties are unified in this particular aspect. They've come together and said, yeah, okay, don't tax us. We're happy. And they're not coming to a consensus. Nowhere I see a discussion that one of them opposes the other, which they do for every other thing. The point is, we're talking about parties. We're not talking about individuals. Now, one may say that, the amount is insignificant. You take the 5 political parties, total comes to 3,500 crores an hour. But I believe that that's not the number to which one should give value to it. There are a lot of satellite entries as a chartered accountant. I still believe the audit measures have to be more strict. Now, what is very disconcerting to me is adding salt to injury or exacerbating already dented tax evasion is the recent electoral bond scheme 2018, which is now before the Supreme Court, filed by the NGO Association for Democratic Reforms. What concerns me is, as much as reforms were made to bring more transparency into the political party system, this particular bond scheme seems to be going back and says, look, there's a complete anonymity on who donated for general public. You can still counter saying, no, these are all through white money. You can always get it from the bank. But my point is, somebody is going to again contribute this to the guy who's going to buy the bonds. So bottom line, all I'm trying to say is, we're going to see more tax evasion, more money laundering, illicit financial flows coming through the bond system. Interestingly, post the electoral bond scheme, I understand that the number of political parties have increased. Today we have 2,628, and many of these political parties we have not even heard about. And you know why they have been bought? For obvious reasons, route the money laundering, illicit financial flows back into. And almost 3,000 crores of anonymous funding through these electoral bonds. So entire taxation political system needs to undergo a systemic overhauling. Now, having said that, quickly on the religious trust, this has been again a very long debate. There's no doubt, with due respects to all the godmens or the convents, religious institutions are one of the tools for all these political parties as well to utilize or bring back or make it accountable, launder the money. Education institutions also, unfortunately, take Tamil Nadu from where I come. We have around 1,200 engineering colleges. out of which hardly 80 or 90 is what you are, the prominent you heard about them. The rest are all in paper, and you know why it is used for. I'm only talking about Tamil Nadu, we can take the entire country. And lack of oversight authorities. Trusts are not monitored, so you have so much issues. What is also very surprising is, income taxes anonymous donations. But this anonymous donations is exempted for religious institutions. It's, again, the word religious becomes a taboo, in terms of sensitive. I still don't know why we have exempted anonymous donations for religious institutions. Ideally, they should also be part of taxing anonymous donations. Now, one of the interesting statistics which I came across recently was, the amount of money that's lying in a religious trust or a public trust has been increasing year on year. And surprisingly, the number of people filing tax returns have come down, which is also not a good sign. And the worst part in the recent past has been the CSR, which was supposed to be a complain or explain regime, went on to a mandatory complaint. Now recently, whole lot of regulations. Why we need such regulations? Because even the CSR funds were actually routed for money laundering and illicit activities. So overall, unfortunately, what is supposed to be a philanthropic or responsible corporate, all extreme complexities have been arisen. So absolutely, to conclude, we need an overall change of political parties, religious institutions. May not garner much tax revenue, but bring in a lot of transparency and, more importantly, stability in the system. And they should set the, as rightly said, they should set the tone. Political parties should set the tone when they talk about transparency, because transparency is the key part of democracy.
Right. Thank you so much. I think a systemic change needs to happen. And one of the first things we need to start realizing is that all of these members of parliament, all of these members of the state assemblies, all of the ministers, they work for us and we pay their salaries, and they are our employees, not our bosses. They're our servants. We don't need to bow to them. We don't need to touch their feet. They need to touch our feet. I think that switch needs to happen. And some educated people need to enter politics and take care of the country. And it's these very people that are supposed to help us grow the country, take care of the problems of the country, and for us to become a first world nation. It's these very people that are actually doing the most damage, which is hopefully then in a few years, all this will get better. I'll never forget, and I think a lot of Indians need to be reminded that from the year 1 to 1750, we were the richest country in the planet. We need to get back there. Mr. Dubey, since you're the most seasoned and most senior person, you get the last question and you get the toughest question. If you were made finance minister for a year and you were asked by the prime minister to collect 10x more in taxes than what India collects now, what would you do?
Thanks, Mr. Nonit. I think I have to just summarize my panelist, what you have, and including you had there. I have to just summarize, and then I will be able to get some answer from that. Interestingly, basically, there are 3-4 core issues which is discussed by the team panelist, whether it is the infrastructure issue, whether it is the GDP improvement, whether it is the improvement of tax collection per se. And but before going to that, and another even the cash economy. The cash economy in India is the major, as you rightly pointed out, is the 40%, whether it's 40, 50 or 30, that is, we don't want to argue since that is not the data, but certainly there is the huge chunk of cash economy is there. But before that, what is the reason of the cash economy? Is it we are as a business consultant, as a corporate lawyers, we are as a consultant with the industry from over 3 decades. Basically, cash economy was not always for the purpose of only the tax evasion. There are the various compulsions of the entrepreneur and businessman to survive. So number one, if the cash economy is, although it can be closed anyhow, although there are a number of efforts has been taken anyhow, but anyhow, the effective implementation and effective enforcement of such, like we are having today, money laundering law, PMLA, which is 2000, we are having effective from 2015. But it is having very selective usage and selective we don't have any fruitful result. Now it is hardly any crime is left today. It started with the 2-3 crimes in the 2005 with the narcotics, drugs, and heroin crimes. Today, you can ask me, I can, as a corporate counsel, I can advise you, anybody can be booked under the money laundering. That is a scheduled offenses list is too wide today. Even the corporate frauds are the scheduled offenses. Even the SEBI related offenses are the scheduled offenses. Even the anti-corruption laws are there. So this is one is the, we are coming to our point. One is the anyhow we have to deal with this key, have the effective implementation to stop the cash, and the cash generation is the compulsion of the businessman. I have to admit it. It is not the passion. It may be passion when we have started the post-independence with 97% tax era. But now in India, we are having one of the most competitive tax structure in the world, with the corporate taxation of 25%, with the individual taxation of 30%. But we are having one of the best competitive tax structure, we can say. But the question is that how we can have that conversion is the compulsion for the purpose of so many things, as my friends directly and indirectly try to put it. If it can be converted, if everything is automatized, all the licenses, clearances, operations, and digitalized, and nobody, human interference, it can be stopped to that extent. I think a lot of things has been done, but effective implementation, even somebody not allowing me to enter into my portal, my portal is hanged. I have to approach somebody. That is now recently that since the tax department is one of the we have the bad name since beginning. Now with this faceless assessments, faceless appeals, again as a IT income tax tribunal practitioners, and we are concerned with the even IT, although we may not be agree rightly or wrongly, but it is all the human interference. If it can be avoided to large extent, then the cash requirement of the industry, if can be stopped, the industry may be able to not prefer to generate it, number one. And then again, my friend who's pointed out, even have to be some bonds can be mechanism with the most transparency and most effectively, the way it was visualized initially, in that way. So coming to our point, if it can be have the clarity of tax, coming to tax was having the clarity of tax laws, retroactive amendments, if can be avoided, we can have a much more clarity on as far the taxation is concerned. And again, the human interface of assessments is can be avoided. We can have digital and more the effective, and it should not be used for the making the orders one way. In the past, although we started the faceless era of assessments, but we are mostly getting the one-way orders, and which as a council we are going to challenge and all this. But if faceless, should we have the neutral order? It is structured good, but it is being managed by the mindset of the people which were handling in the pre-faceless era is required to be the overhauled and changed. One is the clarity and the simple structure of tax laws, as my friends can create the revenue. We are having a lot of potential. It can be converted into the economy. Another one,
Mr. Dubey, I wanted to ask you, for the very rich people, why do we give them a break on capital gains tax? Why do the rich get a 50% tax break or whatever, 35%? Somebody who's working hard is paying more in taxes than some rich person who sold stock. Why a special rate for the rich?
That is okay. Now, again, I would be coming to the GST. My two co-panelists has nicely pointed out GST, according to me, a very nice and robust GST framework is created, framework, and in which can change the entire. It is GST and is going to create the entire GDP and entire tax collection. Everything can be grown. But 2-3 things for what compulsory, practically I'm feeling it. Although what making a statement by personal capacity, not at the council of the department, frankly, but as a lawyer, it is my personal statement. But basically, that as far as the GST and certain things, it should, according to me, everything it is going to have a complete flow of the transaction, and such that should flow without everything should be put into the tax, according to me. Again, if you want to give the benefit to anybody, like we are having a refund system for the exports, although some certain overhauling is required, where my lot of friends are facing the refund issue with the department, that is okay. But the automatic refund system should be generated to whom you want to pass on. But there should not be any exemptions, deductions, this, that should be avoided, and everything should be subjected, and entire chain should be moved. effective e-way mechanism, effective reverse charge mechanism in the tax. If it can be that, then entire bucket of supplies of goods and services would fall under the tax, and then to whom you want to give concession, you can give at the end. So that is the way. And even the 2-3 items which were left, that is the basically petroleum products, very serious. Every transportation, you are going to have the serious challenges of cascading effects. I don't know how it is being deferred and why. It's the number one. Again, what is the again? There has to be, although again require the constitutional amendment. But liquor, keeping again the liquor, and we are having the issue if alcohol is the not liquor, and what is liquor, what is non-liquor. Lot of issues we are facing as a. But I think everything should be put in the tax. By what means, and then you can give the exemption deduction. They can make the change of the tax collection according to me. That can be a major revolving, and
alcohol is a big necessity that should not be
yes,
taxed.
yes. And the simplification certainly is going to improve the compliance and all these. Like I think this if number of taxpayers will increase, I not agree with my friends. Then necessary infrastructure, if properly with the good intention is created, then certainly it is going to take care of even the by 50% population is paying taxes. So I don't believe. I think the digital infrastructure can be created. Coming to the India is again the infrastructure, especially port, roads, bridges. What you rightly pointed out, if you can create the number of, if I will have the revenue, I will able to create. As this has rightly pointed out, we caught into the two, whether it is the revenue and expenses. That is the problem of every household from to the country. That is very useful. How to, I think we have to, if we will able
especially
to,
96%
yes,
of
if
the
we will able
people
to generate. Again, he rightly pointed out the major revenue by going to the non-developed equipment and expenses, including the interest payment. If I'm seeing my budget of last year, with the current year I'm having 15 lakhs revenue. Out of that, major is going to my non-developed expenses and my interest payments. So nothing is left for the developmental as such. I think again for infrastructure, public-private participation is not bad. It has been taken. We can go ahead. The proper infrastructure, tax implication with the clarity, more clarity. We are missing that. We are having friends from who are having the international cross-border advisory. Biggest challenge, I think, what rightly pointed out by friend to Vodafone. Vodafone is not one case. Vodafone, we have lost again. We are at now the country is before the municipal court of Singapore to challenge that. Suppose as a council, I am worried tomorrow that municipal court is dismissing the petition of my sovereign country. What is going to be my stature tomorrow? But unnecessarily, I am pulling something too strong, whether it was right or wrong. I was not getting my share, whether I supposed to get the share. That is the one issue, as we were discussed. Suppose now we are talking about the countries who are generating and who are producing country, they should be given their due share. And post BEPS and post MLI and number of development has been taken place. We are all trying to do it by way of, but I think one day you cannot get the share. Certainly the process is started, and now I think in the next few years maybe we reaching. I think as far the cross borders, what they are doing, whether my equalization levy is right and wrong, that is another issue. Whether it is neither income tax not supply on the goods and services. Again, the new, it is again negotiating skill by the government. Again, we will be able to reach to. My question is that one is the making proper simplification and clarity of the laws, and going away with the complete with the retrospective and retroactive amendments. This is one. Whether right or wrong, we should make our policies correctly. And again, the time-bound resolution of that. Again, my friend pointed out 8 to 10 years for AR rulings. Who is having time even don't have time of 10 months? So who is going to wait? So I think this clarity is going to boost my investment from the cross borders. We are one of the most potential country having a lot of infrastructure, best demography of population. With the 138 million, we are having major young and minds. We are having best demography of infrastructure located and everything. So I think again, I'm not 100% agree with the Chinese model. China can do anything. I'm not to agree. We are the democratic and socialistic economy. We have to have a concern. I cannot. Everybody is very important for us. They're what they want, they can do. They can go with any.
But Dubey, do you want democracy or do you want to be rich?
I think we have to be balanced, Mr. Chu. Okay. But for becoming the rich, we cannot go in the China model. And again, we want to remove so many impurities, including the seriously want ki I say ki money where is lying, whether the unaccounting money mainly lying which places. We don't want to take the any name and whether we have just discussed a few forums. But my question is that really the businessman who's a sincere businessman, he is not having any black money. He is under compulsion generating black money to give somebody. That is the problem. My question is
people don't have black money. It's
that is the problem. My question is that if we can have that comfort not required, nobody is going to even this. So I think this entire simplification, online approvals, it can be improved with the tax clarity, that automatically we will able to get the better GDPs, and again we were able to create the infrastructure, which may in turn give with the proper use of interface of digital technology and all these with the big data analysis and all these what we have created, and now the effective use of that is more required. That I think. So with this, I think
we have some
may be able to have the multi-X, whether it is 10X, 5X, I don't know, but we will able to create few more X, I think.
Right. So Madhura, do we have some questions from the audience? Or we can open up the questions for the audience that is live with us now. Anybody have any questions, please go ahead.
Yeah, just give me 1 second. Yes, so there is one question. What is the quantum of tax in percentage an average taxpayer pays in general, including income tax, service tax, etc.?
Who knows?
You want my role, Chuksa?
Sure.
Actually, in spite of after merging the 37 old taxes by under the GST, that was the landmark law amendment in the century of India, almost post-independence. But still we are having multiple layer taxes, and as rightly pointed out, from the local level municipal and panchayat tax to the state tax to the central taxes, and to the still we are having number of taxes and fees and levies are left out of that. And certainly if we calculate all the taxes, it is certainly going to cross more than 50%, if not less. So it is still on the higher side.
Right. Anybody else have any number?
And certain industries like liquor, they may be having multi-100% of taxes also. Trades, liquors, they may be having much higher. So that we.
But going off of that question, leaving aside GST and all the other taxes, the 3% of India or 4% of India that is paying tax, I would think their overall tax does not exceed 25% of their income. Is that true?
That is okay, Mr. Chuk, but I feel otherwise also. If you make the robust tedious structure, and which the government has done in the last few years, we have got now the withdrawal tax, but there is a payment tax, that tedious is robust now we are having. And if it is improved that level, and if you can increase the rate and make the upfront payment and stop the lower income group for even filing the return, we can have created the even higher net worth people and corporates should file the return. That can be idea.
So Rahul, Bandesh, Sudarshan, what do you think is average tax that people are paying, the 4% that do pay taxes?
So I think
is it more than 25?
It could be because if we go for the middle class, salaried middle class, they end up paying 30%, 34-35% taxes on their income straight away. And then if we take up the GST, they buy the consumer products, they buy the services which attracts 12-18% GST. Apart from the essentials. So for them, it could be as high as 40-45% is what I suppose.
But leaving aside GST, which is if they don't buy anything, then they don't have to pay. But leaving aside that, we've seen that generally speaking, the research around the world is that as long as the tax is not more than 25%, people don't have a problem paying it. It's only when the taxes go above 25% that problem starts. So Bandesh, Sudarshan, in your practice, do you see like a rich person That rich meaning upper middle class that has an executive job at a company in India, do they pay more than 25-30% effective tax, not marginal?
Yes.
So yes, please.
Go ahead, Mandish. Sorry.
So I think in the upper middle class, yes, it is coming in between 25 and 30%. But you see, the government has uh, in last 2 3 budgets have rationalized the corporate taxation. They have capped at 25% for the companies, but the similar rationalization is not done for the individuals. So what happens is that the companies which are greater economic drivers, they end up having effective rates sometimes lower than the individuals, and which to my mind is may sound a little unfair to those individuals. As far as the high net worth individuals are concerned, apart from 30% highest tax rate, they also have the cess and surcharge. So, including all of that, that does go to close to 40%. So for the HNIs, it is high. Uh, but of course, HNIs are all
Marginal is 40, but not effective, right?
I mean, when it's a HNI, the slab will be higher up about 10 lakhs anyway. So effective is also going to be more or less on the similar line. I'm not saying the HNIs wealth wise, HNIs income wise.
Right.
So those who are having the large amount of incomes coming in, the effective rate does come close to 40%.
So Sudarshan, I know you're helping a lot of developing countries with their tax policy. Um, I know you wanted to answer the other question, but let me ask you a different one. What do you think about now the Jeff Bezos of the world and Warren Buffett's of the world and Bill Gates of the world? They don't have any ordinary income. They don't work. They don't have a salary. They don't have a compensation. Uh, and their wealth is in, they make money off of their stocks and assets. So what do you think about a wealth tax? Because, and now to Warren Buffett's credit, he keeps saying that my secretary pays a higher tax rate than I do. My secretary makes 200,000 and her effective tax rate is 40%. But I sell stocks of my company and I'm only taxed 20%. So what do you think about wealth tax?
Personally, I'm not a big fan of wealth tax for the fact that it hasn't been successful, but for few developed economies which have wealth tax. But as you rightly mentioned, in terms of capital gains, in one of your discussions, why is that we have a lesser? So how I would put it is, why not we have a static, instead of having a static capital gains, have a dynamic capital gains at a very progressive rate, and as long as it keeps appreciating, tax them on a regular basis, then leave it, when extinguish, and then we have also empirically proved that wealth tax does not fetch larger amount of revenues for developing countries. Possibly, we will see migration happening if there is going to be wealth tax from a developing country standpoint. So whether are we in a position now to bring back, and even the other aspect that we'll touch upon now is inheritance tax. Do you need an estate duty tax, which of course few years back there was rumors that India is going to bring in, and now the OECD also coming out with a report. Again, talks coming in, should we have to bring in inheritance tax? So do we then will we see? I'm not going into offshore trust or planning. Is it worth? Will we have? Should we also tax the appreciation on the capital? So I think from a developing country standpoint, all we need to do is cover our bases before we start thinking about wealth tax or in a time. And these are very archaic tax policies one should not emulate. I still remember, Nick Calder, who was one few years back when he was asked by one of the committees, I'm not sure Vancha committee or Santana Krishnan committees, he rightly mentioned that developing countries don't know how to tax. When will they learn to tax? One of the things which we are doing now is to emulate from Western, and even think tanks have also tried to emulate what's happening in the developed economy, and they want the developing countries to replicate it, which I believe is not the right way to approach. India is unique in its own sense. States are unique in its own sense. So what we need to do is understand our fundamentals rather than trying, okay, this country introduced inheritance tax, let me also do it. They had wealth tax, let me also do wealth tax. But then eventually, we only had bitter experiences. So countries should start looking, scratch down, they get into the grassroots, try to understand, and then try to devise policies that will suit rather than emulate or get influenced by.
Right. Are you a proponent of bringing death tax back? I don't know why India abolished it in 1985. When the richest person in India dies worth 100 billion, the government will get nothing. When Bill Gates dies in United States, the US government will get 40% of that, $40 billion. And I don't know why we would abolish death tax. How is that helping anyone?
So the same reasons were cited for estate duty as well. Similar to what happened West in the wealth tax, we are not able to collect much because probably now we are seeing large amount of estate given because we're seeing increase in middle class, seeing HNIs coming in compared to what it was 20, 30 years back. So yes, that's why there's a lot of talks going on that India should bring back inheritance tax. We need to wait and watch. Again, my only concern is what will happen if people start migrating, taking up citizenship elsewhere up to that should not be a factor for them to move out of India, take other citizenship to avoid these inheritance taxes. So are we in that stage where we can afford to have a citizen stay back? We're already seeing a lot of flight of movements happening. We've known for brain drains. I think what India should focus now is on brain gain. And I'm not sure whether inheritance taxes will attract people to come back to India. So these are some aspects. So I'm still skeptical. We need to wait and watch for some more years before we bring back SDT. Again, I'm going back, we cannot go by what's happening in the development.
Yeah, we should advertise that come back and die in India because US tax rate is 40% and ours is 20, so we'll give you a 50% discount.
Actually, on that note, not on the die part, but what we should focus is now brain gain. We've had enough brain drain happening. Now this is a different India. People are acknowledging it from what it was 20, 30 years back. So the focus should be to bring back all these intellectual repositories back in India.
Okay, one last question. We've already gone beyond what I thought we would do. I want to thank all the panelists. It's a diverse panel. We have somebody from Ahmedabad, one person from Bangalore, one from Mumbai, one from Indore, one from Chennai. Awesome. One last question and I'll let you go. The question posed to us is, for maximum number to pay taxes, they need to feel they're benefiting as taxpayers. And what is your proposition as to what does the government need to say to taxpayers that you're benefiting from taxes? Any suggestions? Anyone?
As Mr. Chugh, you rightly pointed out that taxes is not for the purpose of benefit. It's for the civilization from where we started our discussion. So I think if I'm going to say what I'm benefiting, it is going to be the too narrow, and we are living in the civilized society. And I think paying the taxes, that is good, but expecting what I'm going to get personally, it is a very narrow mindset, and I may not be agree with that. So I'm having the proposition, it should be considered in the broader perspective. It is the cost of civilization.
Sure.
So if I may just
Completely diametric. Sorry.
go ahead, Bandesh, please go ahead. I'll say at the end. So I think to answer that and maybe understand what we are doing with the money that is being paid as taxes, I think from the government's perspective, there needs to be some kind of a tangible show which tells the taxpayer that this is what we are doing with your money. I'll give you an example. The road from Mumbai to Pune or to any other highway, why does it have so many potholes every monsoon, right? That's the problem here. We need the money to build the roads, but we can't have those roads having potholes. The tangible effect of the money needs to be seen. It needs to be told to the people that, look, we've used your money for the good. It cannot be, of course, directed to an individual or a society. I'll take Mr. Dubey's point to say, yes, we are looking at a civilization, but a tangible growth needs to be seen. If we are looking at all of these issues, nobody will ever think that their money is being put to the worth. We are paying taxes for what? A road that doesn't get me to the place I want to. That's the problem.
Yes, I supplement the view of Mr. Assis. Basically, we need to has to be used for proper purpose. It is not that we are not going to talk about anything individually, but Bombay municipality is having the budget of more than some of my states. But every year in the month of July, entire city is choked with the first round of rain itself, and we are having every year cleaning up the city. But I think similarly the road position, similarly the so many things we understand this is, but unfortunately our budget, if you see last few years, continuously just it is having to going to have very, even the tax, everything is going to be the populist way, and the being the populist way are the most of the majority voters point of view. With the concessions distribution, we are not against the distribution to the poor, as Mr. Chugis rightly pointed out, the inequality is there. So you have to create a home, you have to create a, but it is going to be done in ad hoc measures, and which is not creating the permanent solution for anybody and for the country. And that measures is certainly required to be done, including the how it is being used. We are mainly caught with the regular recurring non-developmental expenses, and even for that it is not satisfactory. To that, I'm okay with the Assis in that.
Thank you. Mandish, you get the last word.
I think there are two aspects. One is I think we need transparency, accountability, and participation from the side of the government. So the moment, I mean, what also Sudarshan was pointing out, that the electoral bonds are in the opposite side direction. So, but if you have the transparency, accountability of how what is collected and how it is used, and participation also from the point of view of asking people as to how do you want some of the budgets to be used. When it is not a very novel concept. Some of the cities in Brazil are also doing it already, where it is a participative process, where some of the budget is allocated and people's votes are taken as to what do they want out of this budget. So that also allows people to participate in the democracy far more actively. And a second, I think, is that we need to decentralize the sources of collecting taxes. If local governments are empowered to collect more taxes, the people will be, because we know the local people, local elected people, the people sitting in Delhi are very far and beyond anyone's voices. And therefore, if we are able to have better communication with local people, local government, making the contribution in the local infrastructure, I think people are going to be far more encouraged to pay correct taxes.
So, Bandish, are you saying that every state in India should be allowed to further tax its citizens in addition to federal tax?
And they are already. No, they are already. We have the municipal corporations collecting taxes. We have the states collecting taxes, and we have the
But
union
on income.
Oh, I mean, I'm saying therefore it has to be rationalized. So one, we know that, to give you is an example, that municipal corporations collect taxes on the properties, and they collect taxes on the differential rates. One is a residential property, one is a commercial property. Residential properties are taxed less. Commercial property are taxed more. But look at the COVID situation. Now everyone is working from home. So all residential are in a way commercial properties. So we have to think in that way, that how the local authorities will be able to collect more taxes. Union will let go of that part of taxes as well. And therefore local authorities will have the far bigger kitty to spend as well, where people will be able to see how money are spent, and transparency will bring in to compare what is happening time by time and place by place.
Too much is going on in New Delhi. One day that will need to be resolved.
Yeah.
Thank you. Thank you, everyone. Thank you, Madhura, for all your help. Thank you, all the panelists. It was great. You got very little time to prepare, but thank you. Your willingness to participate and talk openly is thoroughly appreciated. Let's do this again. Thank you so much.
Thank you.
Thank you, all the attendees.
Thank
Thank
you.
you.
Thank you, Aile. Thank you, all the participants.
Thank you, everyone.
Thank you, everybody.
Thank you, sir.